Hello everyone, and happy to see you here. It's Make Money Guide. Benjamin Franklin famously said, "Nothing is certain but death and taxes." Skip filing your taxes and the IRS will come calling. And when it does, you'll likely face penalties and interest, and even lose your chance to receive a tax refund. But there are ways to reduce some or all of your tax bill legally. If you want to save some money, learn more about how to avoid paying taxes without breaking any laws. Make sure you stay to the end, because we have prepared some tips for you to how to avoid taxes legally. So stay to the end of the video, because you just can't miss that useful information. Imagine for a minute that you're looking to buy a car for $30,000. You're most likely going to read dozens of online reviews, compare prices at various dealerships nearby, and possibly time your purchase just right so you can get the biggest discount. All that trouble for a saving of maybe $4,000 if you're lucky. Now think about your tax bill. If your annual tax income is $700,000 and you live in a Western country, you're easily paying $280,000 a year in taxes. Why not look into lowering that expense? Let us put that into perspective. In 20 years, you will shell out $4 million in tax. The truth of the matter is the majority of people put more effort into checking out the reviews of the restaurant they were thinking of going for dinner than looking into how to decrease their tax burden. Have you ever thought, why do rich people stay rich? What their secret do they know? Because this is obvious that they have to pay really huge taxes. Believe us, they really owe a lot of money to save their money. It's a sad fact that most of the methods used by the top 1% to evade the taxman are, if not moral, at least allowed within the letter of the law. Hold on to your purse strings as we list the 10 dirtiest accounting tricks the rich use to keep their cash. 10. Real estate borrowing. And we are starting with the first but really sneaky way to use the assets to make tax-free income. This way proves the truisms of the world of finance. The more money you have, the easier it is to get more. Put mortgages on your current properties until the rental income equals your expenses. This has the advantages of allowing you to borrow money against the value of those properties free of tax. For example, if the property was valued at $2 million and you can borrow 75% of the equity, this will give you $1.5 million of tax-free borrowing. The money cannot be taxed because technically it is an income and is officially classed as a loan. 9. Life insurance borrowing. Another really clever method of borrowing is life insurance policy. The way this loophole works is this: an individual takes out a policy with a large cash dividend, for example $1 million. This gives the individual a lot of leverage when it comes to borrowing, since most banks will lend up to 90% of the surrender value of the policy. And because this sum is an income, it isn't eligible for income tax or capital gains tax. This has major advantages over actually earning money, since earning $1 million would undoubtedly result in taxes of nearly 50%. If you want to be an instant millionaire or just add to your considerable fortune, this may be the right kind of tax evasion scheme for you. Number 8. Incorporating. This scheme is famous between celebrities. They've incorporated themselves in order to avoid various forms of tax. How does it work? In legal terms, there are many advantages to being a company and few to being an earner in the top tax bracket. As a result, using this scheme will help avoid various forms of tax. For example, by channeling your wages into a nominal corporation, you're able to pay yourself a small interest-free wage claim expenses, and reduce income tax. Number 7. Shell trust funds. This scheme is really one of the shadiest tax dodgers on the market. It allows wealthy individuals to pay as little as 1% income tax per year. Subscribers to this kind of tax plan pay money into a trust fund which accepts their money as donations. The fund then offers its members cheap loans, which the borrowers subsequently, shall we say, forget to pay back. Thus, by disguising their salaries as loans, the members can write off much of their income tax. 6. Tax havens. There are some tax-free places which become a really good loophole for saving money. For example, one of the most prolific offenders is the Cayman Islands, which is home to more than 85,000 companies, making it one of the few territories with more registered organizations than people. And again, many celebrities love this real trick much. Why? Keep watching. This trick is based on the fairly simple idea that if taxes are high in one location, you can gain an advantage by registering your location as being somewhere else instead. It's been a significant asset to corporations, but a number of celebrities have also taken advantage of global travel and relocation to avoid paying income tax. U2, David Bowie, the Rolling Stones are just a few of the names that have dodged the taxman by spending time abroad. It isn't even a big disadvantage. In practice, residents can usually return to their country at a later date or on visits. Tax evasion through offshore havens occurs on a huge scale. A recent study by the Tax Justice Network found that approximately $21 trillion is currently being hidden in offshore tax havens. Number 5. Equity swaps. This scheme is for people who want to avoid high taxes in a particular area while still getting the benefits of owning assets in another. An equity swap is another shady method of tax evasion. Basically, it's an official agreement that allows two parties, say two rich individuals or companies with an interest in reducing their taxes, to exchange the gain and loss of set of assets without actually transferring ownership. One of these swaps is generally pegged to a fixed rate, which means that the participants can expect a fixed return either in one payment or at several predetermined points. This exchange of value allows the parties to avoid transaction costs and in some cases local taxes pegged to certain locations. Number 4, death duty. This method has different names: the death duty, the estate tax, the inheritance tax, but whatever the name, one thing's for sure, most countries have ways of taking a percentage of a person's possession in capital once they have bequeathed it after passing away. But some millionaires use this method. Estate tax isn't called the voluntary tax for nothing. Virtually anyone with the savvy to have earned any money in the first place can set up this loophole, and it's completely legal as well. However, the main problem with estate tax is that it only focuses on the actual property and capital owned by an individual, and there are a number of exceptions to the assets that it can target. One especially effective way of dodging it is to start up a GRAT, Grantor Retained Annuity Trust, basically a trust fund, which invests the money for you. Any income earned over and above the interest is completely free of income and estate taxes. 3. Payments in kind. This method became kind of rendered obsolete by tighter regulation. However, previously, it was possible for executives to receive their payments in kind, so rather than receiving a regular wage, they would instead be paid in valuable tradable commodities such as gold, silk, or other consumer goods and benefits. These could even be sold or traded on for additional commodities, which could be used by the executive. For now, a more modern example is payment in kind securities, which give companies the options of paying investors in additional securities rather than cash. Number 2, avoiding capital gains tax. Want to talk about making your money work for you? Ask rich people, because obviously no one likes to give someone he or she earned. So a number of rich people are interested in avoiding capital taxes and have found legal loopholes to allow them to do so. This sneaky option allows the borrower to avoid triggering the capital gains tax that would come with actually having the money at hand. One cunning way of dodging capital gains tax is by borrowing from an investment bank with the shares as collateral after purchasing options, which set their price at a fixed rate. This method allows having the free cash and repaying the loan, either from the profits of using money or by handing over the shares themselves. 1. Shell companies. Have you ever heard about shell companies in the tax haven of Bermuda? Probably, yes. Seems like this method is one of the less legal, but it's not true. A shell company is a type of company that only exists on paper, allowing the person who uses it to funnel money through it to avoid paying taxes. Typically, this type of corporation has a legal existence, but provides few or no actual products or services. One classic way of using these companies is buying and selling through them, which means that the owner does not need to report international operations conducted through the shell company and will be able to avoid any taxes on the profits. Shell companies are also used to conduct various other pieces of shady business, including selling supermarket brands' goods without impacting the value of the main brand. So just decide which way works best for you. We hope the video was useful and interesting. Thanks for watching. For more interesting money making videos, just follow our channel Make Money Guide.